there, everyone, and welcome to day 6 of our 7 days Forex intensive online training. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, and also get the right tools to enable them to achieve success trading the financial market. So today, we are all about practicals. And one of the most important practical process as a trader is knowing how to analyze the market, knowing how to read the chart, and knowing how to pick a trade for yourself. Okay. So we'll be talking about analyzing the market with trading view, which is a technical analysis. Then also we'll be talking about my FX book, how to analyze the chart with my FX book, which is a news platform which helps with fundamental analysis. So we'll try as much as possible to make this a smooth one and as well straight to the point. So we're going to start with TradingView first. We'll start with TradingView first, which is a charting platform. And to be able to start with it properly, I will need to use this, the spotlight, yes. So over here on TradingView, yeah, over here on TradingView, this is the symbol section. This is where you come to pick symbols, okay? Like Euro USD is a pair, AED USD measures, exotic pairs, cryptocurrencies, bonds, stocks, indices, whatever. You can come here and insert it, okay? Creating an account here, you just need to go to the description. There is a link to my link tree. Once you click on that link tree, it's going to give you a list of links. You can see links to create a HFM, links to create a trading view. Just click on it and then you get access to trading view. Then over here is time frames. Okay, so when you come up to your own for the first time, you're only going to see one time frame. Probably it's the 1 hour time frame. You need to come over here where there is a drop down menu over here, then select all the ones you want by ticking the star close to it. Once you tick a star, it removes it. Once you tick the star, it adds it. So that's how you add that. Then over here is the type of chart you want to be seeing. We have the candlestick chart, we have the line chart, we have the Hakanashi chart. This is the one I use right now for crypto trading, but you can just go back to candlestick, which is the major one. Then over here is indicators. We have different indicators you can use. Okay, so we have the RSI, we have the MACD, we have the moving average, we have the stochastic. Okay, so this is where you go and pick your indicators. So when you join our academy in 10x Digital, we're going to give you access to exclusive indicators that is going to help you scalp the market or either day trade the market and comfortably swing the market as well. So over here is some indicator templates that has been built in on TradingView already. You can gain access to it here if you have a paid feature. Then is an alert when you want to set a price alert, and the replay button when you want to do some back testing on TradingView. But most back testing I do right now is on my MT4. So, but if you want to do some back testing on TradingView, you can pay for this and gain access to it. It's going to be a paid subscription, okay? Then this has to do with the undo. Whenever you do some type of changes, you can undo it or probably get it done forward. Over here is my cloud data. Okay, so this is where I save every single activity that is done on my chart. Then over here is the quick search. When I want to get a quick search about news, a quick search about a pair, a quick search about an indicator, this is where I get it done. And then settings of my chart, expanding to a full screen like this. Okay, this is a full screen right now, so I can click on escape to exit as well. Then over here is taking a picture. If I want to send this chart to a friend, I can take a picture and I can download the image, copy the image, copy the link, send, open in a new tab, or even send it on Twitter to tweet. So over here, I can publish like a post, and everybody in the TradingView community that can be able to read posts, just like Facebook, you publish your chart on as a post, and every other traders can see it and know what your analysis is, and like, follow you, and share, comment, and so on and so forth. Over here is where you pick different pairs, okay? This is where you pick different pairs and save them as your favorite. Create a list of pairs. I can see I have the Euro pairs. Everything has to do with Euro. JPY pairs. Everything has to do with JPY. I have a reason why I listed it this way in folders, so I don't really need to start typing everything all the time. NZD, indices, Forex view, crypto bull run market list, red list, very important for the week. Other pairs, probably not so interested, and stock watch list. So everything is just aligned. So you can just be organized, because this is your office. As a trader, you're going to be spending about, if you had 100% of time as a trader, when you're trading, you're going to spend about 50% of it on trading view, just being able to analyze the market, get some in-depth news, and so on and so forth. Yeah. So this is where you set your alarm, delete your alarm. If you're trading with an alarm, or you connect your MT4 or a trading bot to your trading view to send an alarm notification to your phone. This is where you can as well get it set. And this is where you get the object tree, the objects that are currently on your screen, if it's an indicator, if it's a line, if it's a tool. Let me show you an example. So over here now is Euro USD. I just have two objects, which is my indicators, okay? So the MACD and the smart money concept indicator. So if I add a line over here, you see the trend line has just been added to the object tree. So that's what it looks like. So over here is the chat. When I want to chat with other traders, I call my friends. We chat and discuss about what I see in the market. So that's just it, just like Facebook. Then the most important part that every trader always needs to figure out is this left-hand side. This left-hand side. It's one of the most important, critically important part, this left-hand side, because these are the tools you'll be using to trade. Okay. Starting from the first section, you have to select the type of tool you want to use to point at the market, either a cross, a dot, a arrow. You can also pick an eraser. Whenever you have something drawn on your screen, you can use the eraser to clean it. Then over here is trend lines. Okay, you have the trend line, you have the ray, you have the info line, you have the extended line, triangle angle, horizontal line, horizontal ray. All these are tools you use to just being able to analyze this market. Okay, you can see all of them here, and you can add them to be a favorite, just the same way that you add these time frames to be a favorite. You can come over here. For instance, I want to add the trend, no, info line, probably the info line. I click on this star. Once I click on this star, it is added as my favorite over here. And then once I click it again and remove the star, it is removed as my favorite. So over here are other tools like Fibonacci. Just play around this, okay? Just learn to play around this. The Fibonacci tool, you need to understand what the Fibonacci is first before you be able to play around. It's more like taking a chart from swing high to swing low. When market comes to the 50%, it's a discount. Is a equilibrium. From 61 or 76, it's discounts and so on and so forth. So you need to really know how all this works. But as a trader, I'm going to be teaching you the two most important tools I use to analyze the market. Yes, the two most important tools I use to analyze the market. So let's start right now. So starting off on the monthly time frame. On the monthly time frame, which has to do with one candle means 1 month of price chart. One candle means 1 month of price chart. So what we do on the monthly time frame is to spot what? Candlestick patterns. Candlestick patterns. We have different type of candlestick patterns. The doji, the shooting star. If you remember the day 2 class, we talked about a lot of candlestick patterns. Doji, shooting star, engulfing candle, and so on and so forth. So there are a lot of them. If you have not watched that, go and watch it right now, okay? On this playlist, go and watch it, the day 2 class. So with that said, on the monthly time frame, let's try and spot a candlestick chart. Which candlestick pattern do I see? Over here, I see a doji. Let me show you guys a doji. Finally, you get to see a doji live on the chart. This is a doji. Sorry, not a doji, an engulfing candle, a bearish engulfing candle. A bearish engulfing candle. This is the one that is called a doji, okay? This is the one that is called a doji, okay? It's a doji candle, sorry, or Okay, and this is a doji or a hammer. Okay, a doji or a hammer. So based on what you are taught in the class, what does a hammer represent? A hammer found at the bottom of a trend forms a reversal. A hammer found at the bottom of a trend calls for reversal. So simple and short, we have been able to know that this month of January is forming a hammer. Okay, we have just 8 days left. We have just 8 days left for January to expire. Over 8 days left, and it's forming a hammer. Once this hammer is completed, we know that there is high chance that February is going to be a bullish month. It's going to be a bullish month. It's as plain as that. So something else we like to do as well is that we come to the monthly and we draw some reversal zones. We just look at the past 3 years, draw some reversal zones. 2024, 2023, 2022. We have a reversal zone here. So this is the box. This is why I picked it from over here. The rectangle. So you come over and pick, and you want to just draw a reversal zone. So first of all, you come to where you want to draw it from. You tap once, okay, tap once on your phone or on your system. Then you extend it to the point where you want to draw it to. After you extend it to the point and the way you want it to be, you tap once again, boom, and you let go of it. Then it becomes what? A rectangle, as easy as that. 2 taps, just tap once, extend it the way you want it to be, and then you tap again to drop it. Then let's clone this particular rectangle. Let's clone the particular rectangle. I want to form an area of reversal. I want to get an area of reversal. Okay, so this is the rectangle I see over here. So I'm just forming an area of reversal where the market has gone to, okay, and had some series of rejection to be able to push to the upside. Okay, so this is what we're trying to identify. Okay, exactly. So this is what I see. So based on this, the market came from here, was rejected, pulled back, then was broke, came back, came in here, retested this, ranged, trend, break, possible reversal, retest over here to complete this for the year. Okay, or probably the opposite could happen. Let's see how that plays out. So with that said, we go down to the weekly time frame. What we do on the weekly time frame is to find chart patterns. Okay, we have different type of chart patterns. We have the double bottom, we have the triple bottom, we have the head and shoulder, we have the rectangles, we have the triangles, we have the wedges. Okay, we have a lot of patterns. So over here now, which pattern do I see? The pattern I see currently on this chart is something that looks similar to this one touch, this another touch. Okay, and this is a high. Okay, good. So I see a pattern that looks like this. Let's extend this a bit. I see a pattern that looks like this. Let me extend this to the points of connection. Good. So this is the pattern. Okay, so based on the pattern I see right now, this is the pattern I see, and this is called a triangle. Okay, it's called a triangle, an ascending triangle. This is how it forms over here. Resistance. The triangle forms like this, and when there's a potential breakout of this triangle, then we start looking for the retest. So at the retest is where you enter to continue going up. But this is on the weekly time frame. This is on the weekly time. So the projection we're currently looking at now, based on the triangle pattern, is upside. The projection we're currently looking at now, based on the triangle pattern, is upside. So it is bullish, monthly bullish, triangle bullish, and on the 4 weeks, on the weekly time frame, this is where we're heading. We expect the market to head to next. So we have potential upside push, very high potential upside push, at least from here up to this point, as based as a weekly candle. Okay, this is the potential up push. Wow, interesting, very interesting. Okay, so let's go down to daily time frame. So on the daily time frame, we look at the prevailing trend, and then we search for the daily supply and demand. Daily supply and demand. So what's the prevailing trend? Prevailing trend has to do with which current trend is controlling the market. Which current trend is controlling the market. So based on what I can see, I see that this market being has been controlled by a downtrend has been controlled by a downtrend for a long time. Remember, this is a zone. Oh my God, I did not show you guys how to draw a trend line. Okay, so how I pick up my trend line is this. I either use this line over here, you see, and I go to the trend line. You see this section, just click on trend line once. Then you go to the point where you want to draw. To draw a trend line, you need to have 2 points of touch. This is the first touch, and this is the second touch. 2 touches qualifies a trend line. 2 touches qualifies a trend line, and then you get the multiple touches you can get over here. 2 touches qualify a trend line. So this is it. This is the first touch, impulse, correction, impulse, this correction, impulse again, correction, and then impulse again, correction. But there was a breakout instead. So after this breakout, there's possible what? Correction for this move. So this move is what we're heading for. And this move now is massive. It's going to be massive, okay? So watch out for that. Watch out for that. But sometimes I can choose not to draw it with a trend line. I can choose to draw it with what is it called? A rectangle over here. This is where I picked it from. Let me show you guys over here. This is the 1, 2, 3, 4, 5. The fifth one. This is the rotated triangle. So how you do it is the same way you draw a trend line. First of all, you take the highs that has the connection, because this is more like a zone and not a line. Then after you click the second time, I just clicked it the second time. I clicked one to get the points, just like the trend line. And after that, I open it up. It is a zone and not a line. It is a zone. Boom. Where you have the multiple touches. Boom. This is the perfect one. Okay, this is the perfect one. Why I say it's the perfect one? This one, it has a touch here. Impulse, correction within this zone. Impulse, correction. This is the touch. And then impulse, correction to this touch. Impulse, correction to this touch within this zone. Impulse, and then boom, broken. So it's coming back to this demand, and then boom, we're going up. Fantastic. So now let's head and spot the what? The demand and the supply. So to spot demand and supply is not what I'm going to be teaching you on this class. Okay, if you want to learn that, you reach out to me, and then you can join our academy to learn that. The VIP students will not be happy if I disclose that in this meeting. They won't be happy. So we'll just leave it that way. I just put the demand, and then I'll call here the supply, the primary supply. Yes, not the secondary. So we just put here this primary demand and supply. That's it. We're done with the daily time frame. We're going down to what? The 4 hours time frame. So now we're at the 4 hours time frame. We're spotting the 4 hours demand and supply as well. That's what we spot on the 4 hours. The 4 hours demand and supply. We have a demand here on the 4 hours. We have a demand here on the 4 hours. Okay. And we have 2 demands. Okay. We'll spot the 2 demands, and this is the second demand, which has high probability of being filled. If it has not been filled yet, probably it did with Trump's speech. Yeah, probably it did with Trump's speech. Then let's look at the power supply, the primary supply. I'll be taking this as a primary supply. Primary supply, I'll be taking this. I don't want to use anything that is not the primary. Yeah, but most times markets will just seem stubborn to go to that primary one. So spoil that and spoil this. Fantastic, fantastic. So we do 1 or 2 things here that helps us, but I will not get that done to save us time. Then we'll go to the 15 minutes time frame. Okay, so there is something I did not show you guys how to draw, which I was meant to. Which is this line. I just drew a line. Yes, I drew this line. So I'll remove this line right now. Let me show you guys why I got the line. So this is the line. This is called the horizontal line. You get it from this point over here. Just click on its horizontal line. Then you go to the points where you want to draw it, and then click once, boom, you have dropped it. It's as easy as that. It's not too much. It's not too much. You don't click twice. You don't expand, unlike others. Then we just go down. We get our cause. Okay, so we just find the cause, smooth the eagle's eye. So that's it. So we just wait patiently for the liquidity to be taken, stop hunt, reversal, and from there we move to the upside. So that just it mainly. Yeah, but we aim it up here. The swing trade, bro. The swing trade, 20 pips going for $210, you're making $100, you're putting 1,000, you're making 10,000, you're putting able to hold it this long, bro. If you have the odds to hold it this long to the other demand zone, yeah, before it moves, boom. Then we know how we can get that done based on this. Okay, so this is what I see primarily for the market, right? Low USD. Structure has changed. Structure has changed. Structure has changed. So that just it mainly. So we're done with trading view. Let's go to my FX book. We're going to call it a big wrap, okay? So for my FX book, to get it done, you need to first of all create your account. Go to my FX book. Just Google search the portfolio section. Once you go to the portfolio section, you create an account. As soon as create an account, you need to get it done on the browser. You don't need to get it done on the app, okay? Just get it done on the browser, web browser. Then after you create, you can come over here and add your portfolio. Like I have one of my portfolio over here. This is what you can show to investors, okay? You can come over here and add other accounts you have traded. You can see over here, this was the portfolio I was tracking on my MT4, and it was a real account. And you can see the amount that was being tracked over here. Okay, so this was the amount. This is where you come to add a portfolio. So this is the highest profit made, $673 profit. You can see the projection from January 4th, how the account has been going. The withdrawals were up here. This was the amounts that has been withdrawn: 20, 24, 33, consecutive withdrawal 40, 46, 44, and so on and so forth. So every single trader that meets me, okay, or you want to meet me, don't just come to me and tell me you know how to trade. Send me some screenshots of the MT4 on a very lucky trade you placed, or probably just gambling with a demo, and then you send me screenshot. No, come over here and attach an account. Track your records for a time period. This was a record of an account that I tracked all throughout August 2022 to about January 2023. You keep it consecutive as that you see as the accounts grew, the withdrawals were all up here. I like to withdraw my funds from my accounts. Okay, I like to withdraw. I have accounts for compounding, I have accounts for withdrawal. And you can see over here, it was just two deposits. Two deposits were done, and you see the growth of the account. You can see over a profit that was made was about 367, and each of them was withdrawn. See it here, $668 withdrawal. Deposit was 300. So I literally flipped this account within this August, October, November, December of 2022 all throughout. This is something you can present to an investor. Once they ask you, what is your daily return? You say 0.15%. What is your monthly return on average? It is 29.17%. What is your drawdown? Like 61.29%. This is how you speak to an investor with courage, because you have results and money will come to you. Because money is unlimited. It's a product that is unlimited. Some people say I want to give it away just to be able to get 10% or 5% in a month, but you're seeing here that you can give up to 29.17 on average. You get it? So that doesn't mean that you go and start collecting money from people. I'm not advising you to go and take investments, okay? There are better ways to handle such affairs, but I'm not advising you to do that. But I'm just telling you, keep a track record as a trader, as a professional trader. The other thing you can do here is that on the home section, you can use the economic calendar. This economic calendar you can use it to read the news. You can use it to read the news. These are the news for the day. You can see Japanese news, balance of trade, and over here you can be able to know how the news will impact the forex market and position yourself to make profit from it. Like you can see here, by 11 o'clock we have Judo Bank Service PMI. You just click on it. Once you click on it, it opens up. As it opens up, you'll be able to read the news. Read the news. A higher than expected figure should be seen as positive for AUD, while a lower than expected figure should be seen as negative. It's as simple as that. If the news is positive, okay, you buy AUD against any weak currency. If the news is negative, you sell AUD against any strong currency. As easy as that. Okay. So then over here at the home section again, you can check market holidays. You don't trade on market holidays. Once you go through our beginner course in our academy, you understand you don't trade during market holidays. Like on the 27th of January over here, no trading Australian pairs, okay? On February 6th, no trading New Zealand pairs. These are holidays in the market. There are some days that you also notify no trading of dollar pairs and so on and so forth. So these are market hours, which has to do with the New York session, the London session, the Asian session, the Tokyo session, the Frankfurt sessions, everything are here on the market hours, okay? So this is what you use. It's the same information you get on the laptop is the same information you get on your phone. Okay, this is literally what you use the MyFX book to do. And one of the most important it's loading. Okay, this is it over here. It's loading, okay? This is it over here. So just you can use other ways. So one of the most important factor is this Forex calculator, and it is the position size calculator. I always send you guys signals in the free group. Okay, like the signal I sent today, USD CHF, we made good money from it. We bagged profits twice on that trade. So you should be able to use the position size calculator to apply proper risk management, because risk management is what's going to sustain you all throughout your trading career. Okay, you shouldn't trade like a gambler, just trade like a professional institution, trade like a bank. Okay, so this is how you handle it. On the position size calculator, you put in the pair you're trading. It's loading. I think it's somewhere here. Yeah, it should be somewhere. It's loading. Position size calculator, you add the pair you're trading, add the amount in your account, add the percentage you want to risk, add the stop loss, and then you apply the risk. I think I talked about it in the day 2 class. I'll be day 3. Is that day 2 or day 3? Okay. You can go back there and take a look at it. So this is literally what you use my FX book for. And lastly, I want to talk about one last thing we use it for: sentiment analysis. Thank you. This is still open. So for sentiment analysis, you can come over here and see what are sentiments saying for AUD against any pair. Let's say, for instance, when that news is dropped and AUD is strong, or AUD is strong. You can now come over here. Sentiment is saying that if AUD, the news turns out positive for AUD, buy AUD. So over here in sentiment, you see Euro AUD, short is 71%. Okay, based on the track on my FX book, the short here 71%, which is short means Euro AUD sell 71%. You can go and now start selling Euro AUD because the sentiment is on the positive side for Euro AUD for a sell. Well, you cannot go and start selling AUD card because the sentiment is on short. And if you're shorting AUD card, it means that you're buying card against AUD, but the news is positive for AUD. Instead, what you should do is go for what AUD CHF long, because the sentiment is saying 75% long AUD and 25% short for CHF. So this is literally how you use technical analysis, how you use fundamental analysis, and how you use sentimental analysis with proper tools to be able to get a trade and an edge in the market. Thanks so much for watching to this point. I appreciate your time and effort to be here to this point. Don't forget to smash the like button, subscribe, and share this content with your friends and family. I wish you a profitable trading career.